China isn't looking too hot economically, and a lot of people don't want to say that. Not sure why, but there are a lot of problems boiling up for China, which is the world's second largest economy, which doesn't mean it's going to disappear overnight or completely collapse into nothingness, but there are problems going on there. And because China is very integral to the rest of the world in producing and stuff, a lot of things are made in China. They have effects on the rest of the world. When problems happen in China, problems happen globally. And one of the biggest reasons for all this is this policy right here, zero COVID, which is wreaking havoc because obviously you can't operate if you have a zero tolerance on COVID. If you're saying one test is too many, I mean, you're going to be shut down forever. You can see right here, people are also not spending money on things like food and beverages, retail, or tourism, putting major services under pressure. On the manufacturing side, factory activity appears to have climbed back in September, according to the National Bureau of Statistics. So, under this policy, people just can't spend money. Even if they wanted to, they just can't. Because as soon as something happens, you get like this and you're shut down, locked down, no money, nothing happens, no production. And that's why a lot of companies have been moving away from China in their production line. You can see companies like Apple moving their production lines to Vietnam, to India, to decentralize them a little bit more. So they're not so centralized in China and dependent on them, because right now, if China goes down, so does their supply chain. But this isn't a small task, because you can see Apple will take a decade to move just some of their production out of China. If Apple wanted to start moving production out of China, it would take them a decade to even move just 10% of their supply chain, which obviously means that it's not going to happen anytime soon. It has to happen over a long period of time. And the longer that period is, the more power China has over the production, which I'm not sure how Apple didn't see this being a problem. China's always been authoritarian, so I don't know why they didn't see this as a problem, but the money, solves all problems, so that might be why. But this quote here makes a lot of sense too, saying there is not a lot of point in pumping money into our economy if businesses cannot expand or people cannot spend the money. Exactly. This policy, zero COVID, is wreaking havoc, because even if you printed money to stimulate the economy, people can't spend that money because nothing's open. So it's a closed loop. You just can't solve the problem. And it seems like the leader, Xi Jinping, is much more focused on zero COVID and health response and not the economy, which makes this point kind of mute here, saying Beijing hasn't stepped in. They've done a $203 billion plan to boost small businesses, infrastructure, and real estate. But you have the same problem, meaning where's the money going to go? Businesses can't hire more people, can't expand because they can't sell. It's just a big problem. And talking about real estate, you can see China, the real estate market in China has been absolutely decimated. It's a terrible place to really be. And we've all seen this for the last few months, bubbling up. Collapse in pricing for Chinese houses. The way that China real estate worked is just not going to work anymore. And this is a massive problem, because you can see this has hit the economy hard, because property and other industries that contribute to it account for up to a third of China's gross domestic product. So of China's entire economy, real estate is a third of that whole thing. And with real estate collapsing and falling, people not paying their mortgages, and the real estate market here falling 20% this year, that drastically affects the economy and drags it down. The big thing with China and their real estate market is how they viewed it and the culture around it, basically thinking of real estate as a savings account. It was super culturally appropriate to own a house and be a homeowner, and that's something that you wanted to do, and people went out to do that, and it was a status symbol, and it was thought of as super safe, and you could not really lose that money. But as we're seeing now, you can very easily lose that money. And even climate in China getting worse, making more demand for energy. And you can see as the demand for air conditioning spiked, it overwhelmed the electricity grid in a region that almost entirely relies on hydropower. So this is just something more for what's happening in China and stuff, when they have these heat waves, they have droughts and stuff, and the demand for people who want air conditioning goes up. The grid can't handle it. That collapses, and grid stuff, and all of this is not good for the country, for people to try and work in, to try and do anything in. So obviously infrastructure is a big deal in the economy. If infrastructure is not working, then the economy kind of can't work either. So they're kind of coincided. But for this, a big thing. More demand for energy, less ability to produce that energy means you don't get energy, you don't get power. And then even from the outside, with investors from the US and the other side of the world and China are pulling out, and they are no longer really interested in Chinese companies. The Tencent Alibaba reported their first drop in revenue in the most recent quarter. Tencent's profits fell by 50%, while Alibaba's net income fell by half. So these companies are really falling. 50% drops in profit and revenue. That's not something you want to hear, and it's reflected in their stock. You can see even the overall stock market being over 20% down, something like that. Tencent is down 50%. Alibaba is down 60% almost. So these companies are really falling hard. They're not looking good. And the more that these companies report bad earnings, the more they're going to fall. And the more China sticks to its COVID zero policy and sticks to really constraining the economy, the less outside investors are going to be interested in even taking a chance on these companies. And one of the biggest problems that this has led to is that 1 in 5 people from the age 16 to 24 are unemployed. 20% unemployment amongst the Chinese youth, which is insane numbers. To think 1 in 5 people are unemployed and unable to find a job. They want to work, but they just cannot get a job is a crazy number. And some of the big names that pulled out of investing in China and Chinese companies is SoftBank pulled out a huge amount of cash from Alibaba. Warren Buffett's Berkshire Hathaway is selling its stake in the electrical vehicle maker. And then Tencent had more than $7 billion worth of investments withdrawn in the second half of this year alone. So people are pulling out, people are less interested. It's a lot more risky to be in there, and people just don't want to take that risk. So the money comes out, and that affects the companies that are there. So China's economy looks like it's in some trouble. The real estate problem's bubbling to the top, and that being a third of their GDP makes it a very, very major problem. Outside investment from other countries is slowing down or stopping, or they're pulling money out and pulling it out. So there's just a lot of things going wrong for China right now. But that's not to say that they're going to fall off a cliff and go to zero and completely collapse as a country. They are the second largest economy in the world. They're not going to go to zero overnight. But these problems that are bubbling up are big problems and can just have massive ripple effects for China alone and the entire rest of the world that really depends on China for production. That's going to do it for this video, guys. As always, don't forget to smash the like button and subscribe. We're on the road to 1,000 subscribers, and I'll see you guys in my next video.